नेम इज सौम्या सरकार, आप देख रहे हैं वेल्थ रिडिफाइंड ब्लॉग। आज के ब्लॉग में हम बात करेंगे, मार्केट अभी ऑलमोस्ट 60,000 के ऊपर खड़ा हुआ है। इस टाइम में इन्वेस्टर की बिहेवियर कितना इंपॉर्टेंट है और सचमुच वेल्थ क्रिएशन के लिए इन्वेस्टर की बिहेवियर कितना इंपॉर्टेंट है। फर्स्ट ऑफ ऑल वी हैव टू अंडरस्टैंड फ्यू थिंग्स बिफोर वी स्टार्ट अबाउट दैट जर्नी। Investors are those who wants to generate the profit on a long term, not on a short term. Basically, there is a difference between the trader and the investor. Traders are those people who regularly book profits or loss depending upon the market scenario. So basically, they follow the technical analysis. Investors are those who invest for the long term. They choose a good company and they put the money there and wait for the company to grow subsequently into a bigger company and then book the profit and take out their money, or they hold the money for a longer period of time. In these cases of investor, they should follow the fundamental analysis. So the difference between trader and the investor is technical analysis and fundamental analysis. If you are looking for the promoters, if you are looking for the entrepreneurs, if you are looking for these kind of people, they are mostly the investor. They are not trader. They don't invest the money in the company in one day and take out the money on the second day. They usually invest the money on the longer term basis. As the market is more than 60,000 level, every investor has a common question. The common question is that I should book profit at 60,000 level and re-enter into the market when it comes down to approximately 50,000 level or 55,000 level. Usually, this is one of the biggest fallacy among the investor community. Everybody wants the same thing, that I should book profit at the higher level and I should re-enter at the lower level so that my circle of making profit continues. But you have to understand, this is not an easy task. This is the most difficult task in the market. If it has been easy task, then everybody in the market would have made the money. So even if you want to make the money in the market, your behavior plays a very, very mature and major role. How? If you are a trader, if you are trading in the market, stop loss is very important. And booking profit on a regular interval is also very important. Suppose if you are buying a share which is right now trading at 500 and you decide that you will book the profit at 550, once this stock touches the 550 level, you should book the profit. You should not wait whether it will go to 700, will go to 800. No. Same way, if you feel that 500 is going to come to around 450, you should not hold the stock anymore. If your stop loss is at 450, you should exercise your stop loss and execute the trade. You have to remember a thing, for a trader, stop loss is one of the important. But what is important as an investor? For an investor, averaging is very important because you are a long-term investor. If you are not putting the money at every ups and downs, you are not going to average it out and you are not going to make the profit. If you have only put the money at the higher time and you are not planning to put the money on the lower when the market comes down, in the overall in the longer run, you will hardly chance to make the money. So on an investor side, you should encourage the averaging out of your portfolio. That means you should invest on every dips and ups as well, because predicting the market, which most of the investors want, but they won't be able to do. The data says that mostly 1% of the investor is correct about timing the market, maximum up to 3 times. So they not in every correction they predict, but mostly on 3 to 4 times they predict rightly. Suppose 2008 crisis, suppose 2020 COVID virus crisis, these kind of crises they have predicted well. But still remember, you have to remember that every crisis they could not predict. No investors ever predicted every crisis. So whether you have to see whether you are this top 1% of the traders who predicted the crisis and take out the money at the right time, or you want to be the investor who will continue this journey till his goal is achieved. Now, as I said, investors also wants to average his portfolio. he also needs that his goal to be fulfilled. When his goal is fulfilled, he should exit, because there is no limitation to the greed. If today market is 60,000, obviously 5 years down the line market will become 1 lakh or 1,20,000. But whether your goal is that much or not, that you have to decide, that an investor has to decide. Most important part of this journey would be your goal-based investment planning. You have a goal, you set the goal, you invest your money on a regular basis, and once your goal is achieved, you exit that. Because if you do not exit, probably when you are approaching your goal, either you have a short of cash or you have a more cash than you require. If you have a more cash than you require, it is not a cause of worry. But if you have a less cash what you require, then it might lead to a cause of worry. And you have to understand one thing, that as an investor, you should not start predicting the market. You should never try to predict the market, which is a common mistake by most of the investors. Then after predicting the market, they say, oh, I missed the rally, or they say, yes, I have not entered at the right time. I probably entered at a very higher level where I could not make the money. I request you all investors to stay in touch with their financial advisor as well as their investment advisors, so that you get the professional guidance towards how to achieve the goal, how to invest the money, and stay away from judging the things if you don't understand it. A lot of investors I have seen in this time who tries to predict the market and make the mistakes. I request you all not to predict the market and make the mistake. Rather, you move to goal based, that once your goal is achieved, you should exit, and try not to time the market. This is a very, very important behavior for you, because a lot of time you will be tempted to book profit or book loss or staying away from the market. So it is very, very important behavior for you to not to predict the market, not to try that I will book profit at this level, re-enter at this level. Let me give you an example on it. Suppose if the market comes from 60,000 to 55,000, you will find a lot of people will tell that this market is going to come to around 50,000 level. The major correction is coming. Now, once it comes to 50,000 level, you will find that a lot of newspaper and the news channel will flooded with the news that market is going to see 40,000 level. Now, what happened is that probably the best investment time was 50,000 level, but because you are expecting that market were going to come to 40,000 level, you will wait. Now what happened is that from there market did not correct and it sharply goes up. Then what will happen is that once it is 55,000 level, you will always feel that no, I will not invest in 55,000 level, let me invest at 53,000 level, and you will find that this 53,000 level will never come. So these are the most difficult things in the market, what an investor should stay away from doing. Traders may do it, but for traders also stop loss is very, very important. One very important thing which investors should mind is when a low quality stock is trading higher than a good quality stocks, you should be aware of a correction. Correction may come, may not come, but when a low quality stocks are trading higher than a good quality stock, investor should get cautious. I think this is the best way how I can summarize the investor behavior in a small video. If you like the video, you can click the like button, you can share the video among your peers, as well as you can subscribe to the channel. We will keep on coming with this kind of videos again and again. Thank you very much for watching. Namaskar.